Hi traders, you're welcome back to the Forex Geek channel. If you want to trade like the smart money, then you need to understand ICT order blocks. Okay, so these are key price levels where institutions place their orders, and knowing how to trade them can give you a major advantage in the Forex market. In this video, I'm just going to be breaking down exactly what ICT order blocks are, how to identify them, and the best ways to trade them with confidence. Okay, if you're serious about improving your trading, hit that like button, subscribe to the channel, and turn on notifications so you don't miss any future videos. All right, now let's just dive right in. So what exactly are ICT order blocks? Now, an order block is a price zone where large institutional orders have been placed. When banks, hedge funds, and other major players enter the market, they don't place trades like retail traders do. Instead, they accumulate positions over time, creating areas of strong buying or selling pressure. Now, these order blocks act as key levels of support and resistance. All right. And price often reacts to these zones when revisited. So understanding how to trade them allows you to align with institutional order flow instead of trading against it. Now that you understand what order blocks are, how do you identify high probability zones? So here's what you should be looking out for. The first is look out for strong moves away from a consolidation area. Look out for a strong move away from a consolidation area. So if price moves aggressively from a zone, it likely means institutions placed large orders there. So this looks suspicious, right? Another thing, identify the last bullish or bearish candle before the strong move. This is the order block. Okay, it represents the area where institutions entered before price surged in a direction. Okay, then also check for rejections when price revisits the order block. All right, if price taps into the order block and rejects, that's confirmation that the level is respected. Right, now not all order blocks are strong, so you need to focus on the ones that have clear market structure and a strong imbalance in price movement. Now, identifying order blocks is one thing, but you also need confirmation before entering a trade. Okay, so here are some of the best confirmation signals to look out for. The first is weak rejection. If price taps into an order block and leverages a long wick, if price taps into an order block and leaves a long wick, it shows rejection from that zone. Okay, for example, here we can see that there was a rejection. There was a significant wick, though not too long, but a significant wick, and it showed that there was rejection from this zone. And then watch out for break of structure. If price creates a lower low after tapping a bearish order block or a higher high after tapping a bullish order block, that confirms the direction. Okay, so let's see, we might also be having something significant around here, right? We can see a long wick, we can see a rejection. So we might actually have an area of interest around here though, and you can see that we had the formation of lower high from this zone after the rejection. Also, you might want to check out for divergence with indicators like RSI or MACD. So basically, if an order block aligns with divergence, that strengthens the trade setup. Okay, it doesn't mean that you will always find the divergence, but just in case you find such, for example, we have a bearish divergence around here, because you can see that the price was making higher highs, but you can see the indicator made lower highs. So we actually had a bearish divergence here. Okay, these confirmations help you avoid false setups and improve the accuracy of your trades. Now, even experienced traders make mistakes when trading ICT order blocks. So here are a few things to avoid. The first is entering trades too early. Always wait for confirmation instead of jumping in as soon as price touches an order block. Alright? Also, do not ignore higher time frames. If an order block aligns with a major time frame trend, it is more reliable. Right? And it is bad for you not to use proper risk management. Okay? No setup is 100% perfect. So always use a stop loss and risk only a small percentage of your capital per trade. All right, avoiding these mistakes can make a huge difference in your trading success. Okay, now to really master ICT order blocks, you need to incorporate them into your trading plan, and here's how to do that. Backtest order blocks on different currency pairs. Okay, see how price reacts to them over time. Also, combine order blocks with other smart money concepts like liquidity grabs and market structure shifts. Okay, and finally, stay patient. All right, the best setups don't come every day. Okay, so wait for the right opportunities instead of forcing trades. All right, do not make the mistake of trying to force a trade when there is no opportunity. All right, so by consistently applying these principles, you can start trading with more confidence and precision. Okay, so that is a wrap for this video. Now you know exactly how to identify and trade ICT order blocks like a pro. These smart money concepts can help you stay ahead of the market and trade with more confidence. Okay, now if you found this video helpful, smash that like button, subscribe to the channel for more forex trading strategies, and do not forget to turn on your notifications so that you never miss an update. If you have any questions about order blocks, kindly drop them in the comments below and I will be willing to answer your questions. Okay, in the meantime, thank you for watching and I hope to see you in the next video. Happy trading.